Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 24th, 2025, and we're diving into the latest earnings report from Southside Bancshares. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Southside Bancshares has just released their financial results for the third quarter ended September 30th, 2025. There's a lot to unpack, from their restructuring efforts to their net income figures.
Revenue and profitability overview. Let's start with the bottom line. Southside Bancshares reported a net income of $4.9 million for the third quarter of 2025, a significant drop $20.5 million in the same period last year. John, what are the main factors behind this decline?
The primary driver of this decrease is the $24.4 million net loss on the sale of available-for-sale securities. This restructuring move was aimed at enhancing future earnings, but it impacted the current quarter's profitability. Additionally, there was an increase in non-interest expenses, although this was partially offset by higher non-interest income and a decrease in income tax expenses.
And how did this affect their earnings per share?
The earnings per diluted common share fell to 16 cents from 68 in the previous year, reflecting the overall decline in net income.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 72 cents for this quarter. However, the actual EPS came in at 6 cents. John, what does this discrepancy tell us about the company's performance and market expectations?
This significant miss indicates that the market did not anticipate the extent of the losses from the securities sale. With only one analyst providing a forecast, the expectations might not have fully captured the impact of the strategic restructuring decisions made by Southside Bancshares.
Operational efficiencies and future outlook. Despite the challenges, Southside Bancshares reported an increase in net interest income to $55.7 million and a slight decrease in net interest margin to 2.94%. Can you elaborate on these figures, John?
Sure. The increase in net interest income is attributed to a higher average balance of interest-earning assets, despite a decrease in their average yield. The issuance of $150 million in subordinated debt at a 7% rate also played a role, impacting the net interest margin slightly. Additionally, the company saw a robust loan growth of $163.4 million, which is a positive sign for future income potential.
And what does this mean for their future outlook?
While the current quarter faced setbacks, the restructuring of their securities portfolio and the loan growth positioned Southside Bancshares for potentially stronger earnings in the future. The strategic moves indicate a focus on long-term profitability.
Asset quality and risk management. Let's talk about asset quality. Non-performing assets increased to $35.6 million. How is Southside Bancshares managing these risks?
The increase in non-performing assets is primarily due to a rise in non-accrual loans and restructured loans. However, the company has maintained a solid allowance for loan losses at $45.3 million, which is 0.95% of total loans. They also recorded a provision for credit losses of $1.7 million, indicating proactive risk management.
And what about net charge-offs?
Net charge-offs were $0.8 million for the quarter, which is relatively low. This suggests that while there are challenges, the overall credit quality remains manageable.
Capital resources and shareholder returns. Southside Bancshares has been active in returning value to shareholders. Can you tell us more about their capital resources and shareholder returns?
Absolutely. During the third quarter, they repurchased 26,692 shares at an average price of $30.24. Additionally, they declared a dividend of 36 cents per share. Their contingent liquidity remains strong at $2.77 billion, providing a solid buffer for future operations and potential market fluctuations.
How does this reflect on their commitment to shareholders?
These actions demonstrate a commitment to enhancing shareholder value through both direct returns and maintaining a robust liquidity position to support future growth and stability.
Key takeaways. In summary, Southside Bank shares faced a challenging third quarter with a significant drop in net income and EPS, missing analyst expectations. However, their strategic restructuring and loan growth indicate potential for future improvement. John, any final thoughts?
While the current results are disappointing, the company's strategic initiatives and strong capital position provide a foundation for recovery and growth. Investors should keep an eye on how these strategies play out in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Southside Bankshares' performance in the comments below.